Hello, my name is Brian Murray, certified public accountant and owner of Blueprint Financial Group here in Philadelphia, PA. And today I want to give you 5 quick tax tips for real estate investors. Again, these are 5 quick tips for investing in real estate. And real estate, believe it or not, you probably already know this, but it's one of the most successful ways to build generational wealth. However, it's also one of the biggest tax shelters available in the IRS tax code. The IRS actually encourages real estate investors to own and acquire assets by putting in place various loopholes, deductions, strategies, etc. And all of those things require being proactive in your strategies as opposed to reactive. So here are my quick tips, and at the end I'll do a recap and you can contact me for additional information. Number 1 tax tip is to treat real estate like a business. Treat your real estate investing activity like a business. Don't treat it like a hobby. Meaning that you want to consider some legal incorporation, setting up a business structure. You want to consider getting a tax ID number, otherwise known as the EIN number or employer identification number. You want to consider the best ways to set up your tax structure, whether that's sole proprietorship, partnership, LLC, corporation. And that's all going to depend on your big picture, long-term view in terms of how you set those things in place. You want to consider having employees and independent contractors for your business, because again, you want to treat real estate like it's your business, not a hobby. So that's tax tip number 1, treat real estate like your business, not your hobby. Tax tip number 2 is keep organized records and documentation. When it comes to the IRS, it's not what you know, it's what you can prove. So again, I cannot emphasize that enough. Tax tip number 2, keep very detailed, organized records and documentation. Believe it or not, a lot of the deductions and sort of like the tax loopholes that are available, even the really, really simple ones, a lot of investors missed out on those deductions and those taxes, those tax structures, tax shelters, I should say, because they don't keep organized records. So things as simple as a mileage log. You want to make sure that you keep that so that you can write off your mileage when you're traveling from various properties and doing inspections and going through walkthroughs and things of that nature. You want to obviously make sure you keep expense receipts, invoices, all of those things. You want to make sure that you have your tax forms. If you are going to hire independent contractors, you want to make sure that you utilize what's called a W-9 so that you issue that to the contractor. Make sure you have their information so that you can prove that that person is not your employee and you don't owe taxes for independent contractors. If you do choose to hire employees, you want to use what's called a W-4 so that you have the proper documentation for whoever you're hiring in your business, which again, your real estate investing activity. You want to treat it like a business. Tax tip number 2, again, keep very detailed records and documentation. When it comes to the IRS, it's not what you know, it's what you can prove. Tax tip number 3, use financial systems and automation. I'll repeat that, use financial systems and automation. So you want to automate your business as much as possible. You want to utilize some form of an accounting system, whether that's something as simple as QuickBooks. If you have employees on staff that you're going to pay, you want to utilize ADP or Paychex or some type of system where you actually generate the payroll. You can use systems like Harvest, where you can keep track of time projections. If you're using independent contractors and you want to do time tracking, you can also bill, you can also generate estimates, invoices, etc. through a system like Harvest. And then of course you have like your more well-known systems like Dropbox, where you can actually send documentation, request a signature electronically, utilize financial systems and automation. All of those things create good records and documentation. They create a paper trail, but they also make life easier for you as the real estate investor and the business owner, so that you're not constantly stopping, having to slow down. And then of course you can utilize those same systems. The cost of those same systems obviously become a write-off and become a deduction for you, the business owner, when it comes to running your real estate investing activity. Tax tip number 4, you want to consider active participation in your business. Let me repeat that. Tax tip number 4 is consider active participation in your business. What does that mean? Real estate by its very nature is considered a passive activity, i.e. passive income. If you're collecting rent checks, for example, there's very little work involved in that, and the income comes, you're not necessarily earning that income. It's not, no labor is being performed constantly month over month in order for you to generate that income. So what you want to do so that you get deeper into some of the tax strategies that are available to you you want to consider active participation in your business, right? So that means doing more than just collecting the rent check. Again, if you're building your real estate business, your investing activity, you can also potentially take advantage of some tax strategies such as hiring a spouse, hiring children, your kids, if they're old enough to actually work. And then you create some tax shelters around those family members being involved in your business, where you can potentially shelter some of that income and some of that money from taxes in the IRS. So again, that's a strategy, but it's available to you if you're going to be have active participation in your real estate business, as opposed to passively just sort of allowing it to run on autopilot and just collecting your passive income, your check each month. Finally, tax tip number 5, seek professional guidance. I cannot emphasize that enough. Tax tip number 5, seek professional guidance. For some of the more advanced tax strategies, which are not a simple write-off, a deduction such as depreciation or mileage, you are going to want to look to professionals who can guide you in those areas, whether it's a certified public accountant, whether it's an attorney. You don't want to try to put in place all of those advanced tax strategies yourself. Believe me, you're going to spend your wheels. The IRS, the tax code is estimated to be over 26,000 pages. No one individual has all of the collective knowledge necessary to do that on their own. So you're going to want to work with professionals who have expertise and have some guidance in that area. When you start to talk about some of the more advanced tax strategies, which again require being proactive as opposed to reactive, if you're going to think about 1031 exchanges, if you're going to think about real estate syndication, if you're going to be thinking about opportunity zones and things of that nature, that's where you're going to want to pull in professionals who can help you in that area. Again, attorneys, CPAs who are well versed in the area of real estate investing can be a great asset, a great resource to your team as you're building out your real estate business. So again, just to recap, these are 5 quick tips for real estate investors. The first is treat real estate like it's a business, not a hobby. Number 2, keep very detailed records and organized documentation. Number 3, use financial systems and automation. Number 4, consider active participation in your business as opposed to passive. Number 5, seek out professional guidance from individuals who are knowledgeable in the real estate area. Those are my 5 quick tax tips. Believe it, again, real estate investing, one of the most lucrative ways to build wealth. Also take advantage of tax strategies, loopholes, deductions, etc. It's estimated that 90% of millionaires in this country actually own and invest in real estate. So that should give you some clues as to why and how those folks are choosing to take advantage of the tax benefits of investing in real estate. Again, my name is Brian F. Murray, certified public accountant and the owner of Blueprint Financial Group. You can reach out to me on social media. Social media handle is at blueprint_CPA. You can also pull up my website, which is blueprint4finance.com. That's blueprint4finance.com. Or if you want to contact me, I'm available at 267-456-5970. Look forward to connecting with you soon. Take care.